What's going on, guys? I wanted to do a video this morning on fundamentals, and we're going to do it on cash and cash burn. Cash is really important because it's what keeps a business alive. You'll hear me say it a million times, a business cannot run without cash flow. Your body cannot run without blood flow, a business cannot run without cash flow. Okay? It keeps the body moving, keeps the business alive. Now, we're gonna use CNET because it's up 55% this morning, and there's gonna be a lot of eyes on it. So let's figure out what it's all about. All right. So I'm gonna do way more lessons in the future. Don't worry about all this. I'll teach you how to use this website and what all these characters mean, all this stuff. But let's just give you guys an idea of cash and cash burn. All right. First thing I always do, check the date. Date's right there. And then you're gonna want to look at the common shares outstanding, and that's down here, 16.1 mil. This is table of contents, and bam, we're at the balance sheet, and this is gonna tell us about the cash of the company. So, as of June 30th, they had $5 million cash. So I write that down. You can see current assets, cash equivalents, 5 mil. Very important. Now, we're not going to do a full analysis of the balance sheet. We'll save that for another time. Let's just try to find out and teach you guys how to find the cash burn. So now, after we find the cash position and we write it down, you're going to want to go to the income statement. Okay, we look at the income statement. We see revenues. This is how much money the company's bringing in. And we have cost of revenue. That's how much it costs the company to get the revenue, right? Um, it costs them a lot. They're making 30 mil. They're spending 29.2 mil. They're not making that much money. Plus, right? So they have a gross profit 1.5 mil, but they have to pay to. It costs money to operate a business, right? Obviously, you got to pay employees. You got to pay all kinds of other stuff to operate, marketing, all different stuff. Okay, so we see that this is listed all here, and we see that they're actually spending $11.4 million to stay in business, to run their business. Okay, so at the end of the day, they're losing $9.865 million, right? So if you want to find cash burn, you can do it this way, and you can take this number and divide it by 6 because this is how much money they lost in the last 6 months. Okay, they lost 8.3 million in the last 3 months, but we're going to take a little bit deeper look because this number could be a little bit misleading. Okay, and to find this, you go to the cash flow statement. Okay, so once you're in the cash flow statement, you will see why did they lose so much money. Right? We have cash flows, net loss increased a ton. Now, why? Why did it increase so much? Okay, so the net cash used in operating increased quite a bit. Uh, Accounts payable, oh, advances from customers increased. Accounts payable increased. So we got two things. Um, this is accounts receivable decreased. So yeah. So basically, accrued payroll. Okay, so yes, they did increase a lot of operation expenses. I mean, yes, we see that here, but sometimes it could be a little bit misleading, but this isn't really the case. So that's good to know. So now we know they're burning a lot of cash. Where are they getting their cash from? Okay, so now we look at cash flows from investments, not coming out of here. All right. So far, this company is losing a ton of money. They're not making money on their investments. Uh, Prepayment for blockchain, 3.7 mil. Payment for acquisition. Uh, yeah, so these guys are spending a lot of money. Short-term loan. Okay, so these guys are, a lot of money is flowing out of this business. How are they staying afloat? Okay, and that's when we go down to cash flows from financing. Oh, what do you know? They made $9 million from financing. That means that they were issuing common stock and warrants. Okay, so they made $10 million issuing stock and warrants. That's a lot of money for this company that's not making any money. Um, right? So you're gonna want to take that number. So yeah, we see this, okay? And what we're gonna do is we're gonna take $5 million, because that's how much cash they have, and it's been how many months since June? Where's my thing? So we have, this is June 30th, I think. Yeah, June 30th, I said. So we have July, August, and September. So we have 3 months, and we are going to figure out that they are burning $9 million for 6 months. So we know that they are burning about $1.5 million a month. Okay. And it's been 3 months since then, so 1.5 times 3 is 4.5. These guys likely have no cash. They have a small cash position. If they're burning $1.5 million a month, uh, and it's been 3 months, that means they have burned through probably four to $5 million in cash. Um, Now they might not have all of the same operating expenses as we saw in the cash flow statement. We would have to go and look at it at like a lot deeper, right, to see, um, you know, what are they, where's the money going? Are they paying off a lot of debt? What's going on here? If these are reoccurring, then the cash outflow will be 9 million again. But that might not be the case. We'd have to take a lot deeper look, a lot more research, and that's why you can't just do anything, in 5 minutes to have a good idea. Now, CNET, if it traded 100% yesterday, I would come in here at the end of the close, read the 10K, read the 10Q, get a really good idea of this company, and have a full evaluation by today if I was going to trade it, maybe short it. Oh, no, this is a really good buy, or oh, no, this company needs cash. They're going to raise. If they issue stock, that's going to drive down the price. These are all things you need to take in consideration. But basically, I just wanted to show you how to get the cash flow, cash burn, not the cash flow, the cash burn uh, from using the balance sheet, income statement, cash flow statements. Um, it's something that you have to do. You don't want to buy a stock when they have no cash and they're going to issue. This company is known for issuing stock to raise capital to keep um, their business running. Like right here, it tells us they raised $10 million. That's a lot of stock, right? If they want to raise $10 million, I don't know if they can. We'd have to look through all of the statements. Uh, but I mean, that's about 3 million shares, a little less than 3 million shares. If you dump 3 million shares on this stock, the price is going to go down. So definitely start looking into the fundamentals if you don't already. If you want to learn more about this stuff, please tune into my channel, like this video, subscribe if you really want to learn the ins and outs of trading, getting in stocks, making money in the stock market, like knowing how to research these companies. I have a chat and we discuss stocks all day in there. We're researching them, we're doing a lot in there, so definitely consider joining that. And yeah, that's it, guys. I just hopefully this video helps you understand a little bit more what you're buying, what you're selling. And yeah, if you like this video, don't forget to subscribe, give me a thumbs up. If you don't like it, give me a thumbs down. It's all good. Hope this video helps. I'm out of here. Peace.